Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts and going over some options data. And so this is week 14 of the options theses, highly regarded. And I have to say, this is going to be the final week that I do this. The reason for that is just it takes a lot of energy to put the data together into these spreadsheets. And, really the whole point of this options theses series was for educational purposes, for me to be learning, getting better with unusual whales options data. And I have done that. And every single day I spend time compiling these spreadsheets. And I think that I would actually get more value out of diving into the unusual whales data on the website with the data that they provide, that I don't have to compile, don't have to spend the time doing that. And then from that, I can take that information and make more videos. So I think everybody would win with that. And so, yeah, I just wanted to kind of do this final week, because after being sick last week, last Saturday, and being at a wedding the weekend before, I've taken a little bit of break from doing this, and yeah, it just hasn't really been worth it in my view at this point, because I have learned a lot. But anyways, I don't want to spend too much time on the intro, and so I am just going to go down the list here so we're all, on the same page. And then I'll dive into the data. And so, as always, this is just a personal trading journal or a documentation for myself to be getting more familiar with this data. And with that being said, like I just said, this is for educational purposes only, really just to be having fun learning more about the charts, about the options data, and about the tools that Unusual Whales does have to offer. And also, none of this is financial advice. And some, if not most, of the trades that I go over in this video will be bad. That's just a reality of it. And most, if not all, of the contracts will be going to zero. Options are very, very risky. And so, with that being said, you can lose a lot of money with, any of the options here that are on the table listed in front of us. And any of the numbers that I go over, any of the levels that I'm talking about, plans do change, whether that's, during market hours, every minute of the day, some news could come out, or even over the weekends. With Donald Trump now in office, there might be some new tariff news, or, there could be something like a DeepSeek that does cause things to go down, whether the market's open or not. Also, on the other side, could cause things to go up. So good to be nimble. And with what I'm talking about with these spreadsheets, there could be some typos. This is stuff that I do compile every single day after the close, after work. And I am just thinking about, how do I utilize the data from Unusual Whales to make more content? First, I have to learn how to use that data. I feel like I have done that, and that can be used to better inform on the charts that I go over. Maybe they're not going to be the most exciting charts that I go over, but I think that they will be supported with data. And so, that's really what I am interested in, whether it's analyzing the data in the charts themselves, looking at specific levels, retracements, patterns, whatnot, or just looking at what the Unusual Whales data is telling us. I want to be doing that. And then also, of course, there will be timestamps to all of the tickers listed over here, so you can check them out, skip to them if you like. But I would encourage, just grabbing a beverage, whether it's coffee or beer or whatever, and just, hang out and enjoy the data with me. And so, you can see the list of all of the tickers here. Ed is blocking some, so I'm just going to scroll up so you can see them there. And so Wolf is the one at the bottom of the list. And then one thing that I did want to point out, talking about how some if not most of the trades will be bad. I did exit my Hycroft mining call contract, and I'm pretty happy about that. No longer holding it, and so that will be taken off this list. But the reality is all of these will be taken off the list because I am not going to be doing these options theses anymore. I'll just be using the data from Unusual Whales to inform on the charts that I do go over. And something else that I, actually updated this a couple weeks ago, but just wanted to go over it here. My guide, which is to not fall in love with stocks or contracts, not get greedy, and also not to get jealous. There have been some stocks, whether on this list or not on the list, that I have gotten left behind on. And, so I need to not fall in love with those, not chase, not get greedy, not get jealous, and not get FOMO. And so, that is something that I have been trying to work on. One of them that, as you can see, I'm not currently holding is BlackBerry. That is one that my analysis has been spot on with it. Really, I believe informed by Mr. Chart Norris on X. That is what put it on my radar and started to follow up on it. And yeah, that's one that I'm not holding. I wish that I was, but it is how it is. I was able to make 20% on a couple of those BlackBerry contracts, so I do feel good about that. And with that 20% being mentioned there, I was previously planning on taking profits at 80% with a lot of these contracts, but it just hasn't really played out. As you can see that I am holding a lot of them. And that's just because, 80% wasn't hit. Maybe 20% was. A lot of these that I'm still holding, I did take some profits on. And so that's because, I think 20% was hit. Maybe 30, maybe 40, but not 80%. Some of them, like BlackBerry, I could have made, 100% or more on them. But that's not the case for all of them. While some might run to 100, 200, 300% profit, and so on, not all of them will. I'm going to be wrong on some, if not most of the trades. And so I feel that for myself, at least at my level of at identifying bottoms and entering these positions, building these positions, I think taking profits at 20% is a nice way for me to be trading these personally at this point at my level of experience. Getting to 80% is really just a little bit greedy because if there are 20 positions on this list, let's say, as that is my goal to have no more than 20 positions. Maybe one out of those 20 or two out of those 20, 5 to 10% of them will, go up to a 2x, which is 100% gain, but not all. Majority will go up to about 20%. So I think that's the best level for me to be trimming, for me to be exiting these positions. And so that's kind of why I have this grade out here. It doesn't matter if I have one contract or 20 contracts. I should plan to exit at 20%. So, any of the levels that I go over, whatever my average is in these contracts, my plan effectively is to take profits at either break even at 10% or 20%. And so I'm not going to go over what my limit sell orders are, or, if I do plan on dip buying more, that's just going to be reflected in the data. And, really, I don't plan on holding any of them up to 80% unless they are later dated, like the leaps that do expire. January 16th of 2026, I'd be taking 20% profit here and then waiting for that to get filled before considering taking profits on those later dated contracts. But yeah, generally, if it does go up to 20%, I just want to have that liquidity, that cash on the side so I can maneuver a little bit better. But anyways, that's enough on the intro. So let's get into the data. And as always, the first one on the list is going to be AMC, and that is the $8 call that expires in June. This is one that over the past week, I was adding to it. Looks like I added 5 contracts to my position on Monday. Let's see. Up here, I don't know if you can see it. Yeah, just below the banner there, I did add a contract at 21, 20, and 19 cents. Then I also got another at 18 and 17. It looks like the low for the week, though, was 15 cents, but I decided to pump the brakes a little bit on Friday, and that's just going to be because of the data that I saw in unusual whales. This was suggesting that, maybe there'd be some bottom forming soon, but I think really it's just because price came down to my level of $3.05. And so I've started to accumulate some shares very slowly, very passively. But, I was realizing, well, I probably want to be more aggressive with the contracts than with the shares. And so that is why I got 5 of these contracts over the past week. And my plan for this contract, as you can see, is to trim, I believe, 1 contract at 10%. And then another at 20%. So, I said I wasn't going to go over the numbers that my limits are at, but, they're right there. I've already done that math. And so, yeah, this one we can just see that, my position was being held here, this solid red flat line there, but I've more aggressively started to buy the dip because we did come down to right around $3 a share. And I'll go over the chart in just a second to kind of support that, but we can see the premium here, the low it looks like on I misspoke earlier. The low on Monday was 9 cents, but actually that might have been, kind of, some odd data because I had a limit order placed, I believe, at 18 cents, and that was not filled. So, I'm not really sure about that 9 cent low there. But that was, in fact, the low of the week, not 15 cents. But I just did not see that order getting filled. And then, on these other days, on Wednesday, it looks like the low is 18 cents. I got that fill. Then the low on Thursday was 16, and my fill was at 17 cents. But yeah, just kind of pumping the brakes to see. And it looks like my average, over the past week, I was able to get it down from 53 cents down to 29 cents. So feeling pretty good about that. But again, this is not one that I plan to hold for 2x or anything like that, just kind of casually getting out at 20%. And with the data up here, what we can see is these spikes in the volume. This one actually corresponded with a decrease in the open interest, that green line coming down, whereas this spike in open interest corresponded with an increase in that open interest. So that is good. With a spike over here that represented about $60,000 in premium with the blue spike over here. Whereas this other spike was only about $40,000 in premium. So, not a huge amount of money. And so let's just look over at this other contract, which is the $20 call that expires in January. This one, I do have a limit sell placed at 20%, just to, keep that risk managed. And this one, I was not buying over last week. I just kind of want to get my risk down on the contract that expires a little bit sooner. My average is still at 39 cents, and it looks like that is 5 contracts about. I'm not exactly sure, but yeah, I just got that limit order placed over there, so I don't have to be worrying about it. I could have, added to my position at about a 50% discount from my average, but, just kind of taking it easy just because I want the data from unusual whales to be more supportive of suggesting that a bottom is in with AMC. And so I am just not seeing that yet, even though we did come down to around $3 a share. And so just looking at the data here, let's see, we do have open interest continuing to climb, but no big spikes in the total premium or volume, not like we saw over here when there was $800,000 in premium. So this one, I'm fine just kind of chilling, waiting on the sidelines for this. But let's look over at the chart so we can dive into some of that data. And so, yeah, over here, basically my options or my thesis, my 2-month thesis with AMC. I'm actually going to go over to the web browser here real quick, just point this video out, my 2-month AMC Theaters thesis. It's only received 281 views, so make sure you check that out. I do have it linked in the table here, which I will have that online. You should actually be able to see the URL there just above my head in case the link is broken or you don't want to be going over to that. But you can also just head over to the DGen Ed YouTube website to get access to that video. And so really, the thesis behind that is that we have this gap down here at $2.91, thinking that, people might be seeing that gap thinking, okay, I'm going to wait for that gap to be filled, and then I'm going to buy like crazy and send the stock higher. But I think that kind of a way to play retail would be to nearly fill this gap, which we have not done yet. We came down to a low on Monday of $2.95, so just being 4 cents above that gap fill, luring people, or teasing people, I should say, into, oh, the gap's almost filled, I'm going to wait, I'm going to be patient, let my limit buy order be filled once that gap is filled. But I view that this could be forming, higher lows right now, potentially, and that we start to go higher, and that those who are patiently waiting for this gap to be filled will recognize their mistake once we get to, filling this gap up here at 685. And then they would recognize, hey, I was left behind, I was wrong, and now I'm going to FOMO buy in once this gap is filled, because they were left behind foolishly waiting for this gap to be filled. But anyways, the price closing on Friday at $3.10, it's effectively at $2.91. So I feel like this is as good a time as any to be buying the dip, but also do brace for the possibility of this going below $2.91. And when that does happen, if it does happen, I'll do a follow-up on my AMC thesis video. But for now, it's still, intact for the month of February, and I will do another video if it becomes invalidated when we do fill this gap, or, when the 2 months does expire. So yeah, I'm just thinking that this is looking like it's in dip buying territory, whether you want to be super aggressive with that or not. But as far as options goes, does look like it's a little bit risky with the earnings call. I believe this is on Tuesday, February 25th. I might be wrong about the day of the week, but the 25th in the after hours. Unfortunately, I am working that day, so I won't be able to cover it, but I might be watching it later after work, just to kind of get some info on that. And to see if Adam Aaron says the magic words of cash is king, to see if he rugs us some more. So yeah, I've lost a lot of conviction in the stock, in all honesty, following the announcement of the dilution, and then the fact that we did raise capital at $3.68, which is just super disappointing because we've been trading in this range for half a year, and to raise money at an average price of $3.68, we got ripped off by that. And so I'm just not too happy with it. We could have been doing that closer to 5. I think that would have been better. And, because I think that the stock is worth, at least $4 a share, and we're selling it below that. So yeah, I just don't feel too good about that. But anyways, I could go on about that, but I will refrain. And so let's look over at the data from Unusual Whales. And so I got both of the contracts here, but I don't necessarily find this data to be that helpful, at least not to be diving into the data for these options theses, just because there's way too much data for all of the stocks for me to be going over. So I'm just going to click over here to expand this to be looking at the net premium. And so what we can see here is that this is just for the 1 day. So this is for Friday, February 7th. What we can see is the stock price in yellow, that ended the day a little bit positive, but not super crazy or anything. But what we can see is the net call premium in green was negative. There was a good amount of selling, as you can see in the volume over here, but it did end the day positive. We can also see that the net put premium also spiked higher, but then came down lower, but still ended the day positive. And we can see from the numbers over here, net put premium went up by about 20,000. Net call premium also went up by about 20,000, but a little bit more than the net put premium. So it's slightly bullish, but not so much. And if we do look at the bear bull slider for the day, 46% on the bullish side, which is the majority based on this neutral amount, but effectively it's 50-50 as, call and put premium both went up by about 20,000 each. And that's not an exceptional amount of money. So it's nothing really to be going crazy about. And then also the volume only increased by about 319. So you can see that there. It's pretty close to zero. There was a good amount of selling of calls over here. So that is bearish. There was a good amount of buying of puts over here. That is bearish. But overall, it looks like the net selling of calls over here did outweigh the buying of those puts. Maybe I got those mixed around in what I was saying. But yeah, this is net selling over here. And so while you might see the buying of puts, that exceeded, if you look at the numbers up here, the net put premium increased by 30,000 here, whereas net call premium only went down by 6.66 thousand. Maybe that's a bad omen. I'm just kidding. It's just coincidence. But what you can see with that is the volume came down, and so what that is telling me is that the buying of those puts, those were cheaper puts versus, or actually, let's see, the volume was coming down. And so that means there was probably more selling of cheaper calls, as the green line there is negative. And so that's corresponding with negative volume versus the buying of more expensive puts. There you go. So you're going to have fewer puts being bought. And so that's going to less so affect the volume down here. And so that's why you actually see it negative there. But anyways, don't want to spend too much time on that. I will switch over to the 14-day here, just since it has been, kind of a good amount of time since I've really looked at this. And the thing that really stands out to me, I guess, which is kind of surprising, is to see this massive increase in the net put premium. This was for the 5th. That went up by $916,000 versus the net call premium, which came down by about almost $120,000. And so this does suggest that it is more bearish. It's almost $1 million of these puts being bought versus the calls being only 100,000 and being sold. As you can see, the green line there is negative. So that doesn't necessarily look so good. Also, we do have net calls premium being down by more than $500,000 here. And so, generally, this isn't looking super great, but we did come down to that level that I was talking about, 305. And so we have not yet filled this gap. So I think that this is kind of, accumulation territory. But anyways, let's get back to the data over here. Going to skip over to BlackBerry. This is the $7 call that expires in January of 2026. So that's a leap, expiring on the 16th of January. And this is one that, unfortunately, I followed my little table and took profits at 20%, made about $10 there. My position average was at 48 cents, and I was planning to buy back at 48 cents, but it only came down to a low last week of 50 cents on Monday, the 3rd. So that's a little bit disappointing, especially because, from 48 cents or even from 50 cents, it did go up to a high of $1 per contract. So that could have been, a 2x there. But, good to not fall in love. And so I'm trying to be disciplined with that. But generally, just looking at the data here, we do see spikes in volume, which correspond with spikes in premium of, almost 300,000 over here, over 150,000. So looking good there. And we do see a continued increase in that open interest. And so for me personally, what I am looking for with BlackBerry is probably to not reestablish this position, but I will continue to watch it, even though it is kind of the end of the line for these options theses videos. But my plan is for basically the stock to dip down to below $5, and then I would just kind of passively accumulate some shares. And then maybe if something does look appealing with the options data, then maybe I would reestablish this position. But yeah, just kind of waiting for the dip, not chasing, not getting FOMO, nothing like that. Or at least if I am to do that, it would be with shares, which is much less risky than options. But yeah, let's flip over to the chart for BlackBerry. And we can see, yeah, there was just this long kind of accumulation period that was uptrending a little bit. I started to see this sign that was looking like, oh, maybe there's some bearish divergence. And we are currently on the daily above in the RSI, above 70, which is in the overbought territory with that RSI at 80.34. Maybe it's putting in a little bit of a topping signal with the spinning top there. And so that's kind of why, I would wait for, this to pull back to around $5 to maybe accumulate some shares, just because, I like the chart big picture. I do think that this could be going to $7 a share based on, the options data that I'm looking at. And that is really just coming back to this high from August of 2022, right around $7.20 there. But yeah, I don't want to be chasing, so I'll wait for a pullback, and we'll just have to wait and see. But also too, just looking at the data over here, zooming in on the daily data, we do have, higher highs going in the chart. But with the volume, we do see it is, still elevated, but each day it is decreasing. So on Wednesday, we saw a volume of 29.77 million. Then on Thursday, 28.62 million. Then on Friday, 27.34 million. So as the stock price is going higher, volume is coming down a little bit more. We are overbought in the RSI. So, I would not be too surprised if we do see a pullback to $5. And so maybe that would be an opportunity to get back into this call, whether that's at 48 cents, like I'm talking about, like my average was previously 50 cents, or, maybe 60 cents, something like that. I think that it will be good to be waiting for the pullback. Maybe that doesn't happen. Maybe I get left behind, and that is totally fine. No FOMO, no jealousy. Happy for anybody who is long and who has been long since the lows over here, around 224. So congrats to those who are still in this. But let's look over at the unusual whales options data. And so just for looking at this contract, we can see from the data down here over the past, maybe I just want to scroll up here, over the past week, we can see that, or really, over the past, months, there's just been nothing but buying of these contracts. So going up by 1,000 contracts around January 16th, and that just continuing to increase 5.5 thousand on January 22nd. And then on, between Thursday and Friday, we saw an increase of almost 1,400, so 1.368 thousand contracts increased to have an open interest of nearly 17.5 thousand. So looking, pretty strong there. Volume has been, 2,000 on the 5th and 6th. So looking really good. And then looking at the data over here, let's expand that. And so we can see that the volume was green all of Friday. And it looks like, puts were pretty flat to negative on the day, whereas call contracts were being bought up in green there. And so we can see that over the course of the day on Friday, February 7th, net put premium went down by a little more than 8,000, and net call premium went up by almost $250,000. Looks like 245.58 thousand. Still looking good there, but it's not millions. I think that's kind of the consequence of, this being a little bit cheaper of a stock, but generally just looking really good there. And if we do look at the bear bull slider, it does look like majority on the bull side, which I would actually expect it to be more so because we do see more so bullish, because we do see, just a lot of calls being bought and then, puts being sold. So that is, overall bullish, but maybe it's just it could be more bullish. And so let's actually take a look over at the 14-day data over here, and we can see, this is just looking really, really good. We do see calls, premium just increasing kind of steadily over here over the past week, kind of a little bit of a cool off as we have, kind of formed this top here in the stock price. But the calls are still being bought up. Maybe this is showing some weakness, though, because we do have, this massive amount of volume. So on the 5th, so that would have been Wednesday, we can see this massive amount of volume. Volume ended the day on Wednesday about 26,000 contracts, increasing, with net put premium coming down by over 34,000 versus net call premium going up by over 600,000 up here, which did hit a high, a peak of over $700,000 in net call premium, nearly 720,000 before it did pull back, ending the day around $613,000 increase in that call premium. We also saw back over here on January 30th, net call premium increasing by over $500,000, whereas net put premium came down by nearly 20. So overall, this is looking really, really good. But with this movement in the stock price, I would look for a cool off, a little bit of a pullback before starting to consider adding more, whether that's shares or contracts. And then I actually just want to flip back over to this data here because, if we do want to be seeing a cool off, I think that would kind of be reflected in the implied volatility. I don't necessarily look at this too much, but that has been cooling off, and it's now right around 70%. As we can see over the past week, it did hit a high really over the past 2 weeks, a high of 73,000. Now, pulling back to 72,000. So maybe we're starting to see, getting back into a pullback area where we would want to start to reaccumulate after this run. Maybe not getting down to the previous average of 48 cents. That's fine. But this is, a leap that expires in January of next year, and it's not yet at $7, trading right around $5.25, which was the closing price on Friday. So there's definitely potential for, some dip buying opportunities. And so that is what I am going to be waiting for with BlackBerry. But yeah, if we do move over to the next one, that is going to be Celsius. I've got 2 contracts to go over in the spreadsheet here, but actually 3 on unusual whales. And so, this first one is the $50 call that expires in June. I'm actually a little bit concerned that this one might be going to zero, and that is actually going to be because of some posts from the Bronx Viking, which I'll go over in a second. But yeah, this has just been bleeding down, as you can see in the stock price. And, maybe I should have just walked away, as I had made some profits with this earlier. And I did actually buy another contract a couple weeks ago at looks like an average, or just one contract at 59 cents, getting my average down to 93 cents. Didn't buy any last week, although I was tempted to around 25 cents, but orders weren't filled. And yeah, and so the reason why I was intrigued is because it came down to below $22 a share. I was thinking it might be bouncing around there, and it does look like it has, but it might be continuing lower. So being a little bit cautious with that. And I do think I have a buy order, a limit buy order for this one at 25 cents, just to be trying to get my average down. But this is one I do plan on exiting. I just got that limit order placed at 20% profit, but maybe I would settle for, break even at this point. So we'll have to see. And I do have, I don't know if it is a hyperlink. It doesn't look like, hyperlink should be active there. I did put out a video going over a massive Celsius call position opened by a whale. That's not the contract that I'm going to be covering here in the spreadsheets, but I will go over that in unusual whales. And so, feeling a little bit concerned about this expiration in June, the one that expires in January 16th of 2026. Less concerned about this one, but, I just haven't been too aggressive with it. I did buy, one contract at 54 cents, have not attempted to get that average down, even though came down to lower than 50% discount from my average, just that one contract. And I do plan to sell that at 20% profit, which would be around, 11 cents. So nothing, or $11, nothing crazy there from my average there. But yeah, just kind of chilling with this one. And let's just flip back over to here. We can see, some spikes in, the volume, open interest just kind of being flat there. Spikes in volume really going back to the beginning of February, and this volume spike was not that notable as far as the premium goes. So, this one might be one of the losers for me, and I'm fine with that. But I did want to go over the post from, the Bronx Viking, and that was, posted by him on February 6th. And he's saying, few things bring me as much joy as watching the world's most trash energy drink company get absolutely annihilated. So he's happy about that. I think he's been short following this double top year. And I'm not sure exactly what this ES stands for. I believe exit short and then reestablish short position here before it continues lower. And this does look like, this is a bear flag that's formed here, that it will continue lower, that this is a, effectively a measured move, that this distance from here to here could be replicated from here to down here. So good to be cautious with this. But it's quite possible too that we do see this bounce here. Or actually, no, that's not a bounce. That was the red candle drop. We have since seen a little bit of a bounce, so I'll go over that in the chart. Whenever people get, really confident, cocky about their trades, maybe that is, a sign that there will be a little bit of a bounce. And this was posted on Thursday the 6th. And so, we did see a bounce on, Friday the 7th, but maybe it's not so much of a bounce. And so with the chart here at closing Friday at $22.41, being up 2% on Friday, following, the cocky post about this coming down. I do think that it could still be going lower. I did, adjust the levels that I had over here to be a parallel with the pivot points being the low from January 28th of 2022 to the closing price on, May 10th of 2022, and then the other pivot point being the low from that May 10th day. And so just to kind of get like a little bit of a window, I could fudge the lines a little bit, so it would suggest that we are forming a bottom here around 22, but I didn't want to do that. I kind of want to brace for further downside. I did previously have that fudge to kind of show $22 being a bottom here. But what we can see is the 1618 Fibonacci retracement from the move over here. That's around $20.80. I do have an alert there for myself, but just in case this does, bounce, maybe move up to, 25 or so, get rejected from that previous high, fill the gap here before continuing lower, I could see that as a possibility. So that is why I'd want to get one more of those contracts at 25 cents. But I could see this go lower to whether that's sub 21, maybe to 20, corresponding with the parallel down there around, like you can see, $20 there. So yeah, I don't feel super confident in this, but, risking another $25 to get my average down and then to exit, I could see that being a good way to play this. And another reason why I'm feeling a little bit more confident to get my average down rather than just be full on bearish is because of some of the options data over here. And so one of the contracts, that I personally am holding is the $50 call that expires in June. This one might be a little bit risky. The other one is the $100 call that expires in January. So I've got plenty of time, 342 days with that one. So not as risky in that sense, although $100 from, let's see, a price of around 22, that's a pretty big swing. So good to be cautious with it. But the contract that gives me some confidence that I haven't been tracking is the $40 call that expires in July on the 18th of this year. And so that is the one that had the unusual whales options data. And so we can see here down here, the open interest is around 39,000 contracts. And if I do scroll down, we can see there was this one day, it looks like it was on the 12th, we saw a volume of 38,000 contracts being traded when the open interest was on that day around 172. Following the 12th, we saw an increase in open interest of nearly 38,000, putting the open interest at 38,094. And following that, we have seen some decreased days, but overall from 38,000 contracts being open, that's gone up to 39,026 contracts being open. And so the whale that bought here is still holding. That's when premium was around $4.40 at the low to $5.20 at the high, being an average of $4.69, for that day. And actually, I should make the correction because they bought on this day when there was that volume. The low was 460, the high was 525. And, 18 million was traded on that day. And so that is still being held. So there is still some hope that the bottom could be in with Celsius. So don't lose all hope just yet. And so if I'm just going to expand the chart over here so we can look at that a little bit more closely, this is just the 1 day for February 7th. We can see the stock price went up a little bit. It was up by about 2% on the day. We can see that the net put premium was negative, that red line coming down, whereas the net call premium was up, that green line going up and staying up, although there was a little bit of decrease towards the second half of the day. And what we can see is volume was green, and that suggests that the selling of these puts, these were probably more expensive, therefore lower volume traded. And so that would suggest to me that those puts are being sold at what is potentially a bottom, taking profits on those puts. And with that being said, you then see the increase in calls in that net call premium. And so you actually see, looking at just the numbers here, so for the day, I can point them out over here, net put premium went down by $524,000 versus net call premium went up by only $253,000. And so that kind of strikes me as, being a little bit odd. Why would the net put premium be down twice as much for selling versus the net call premium? And then we see volume increasing. And so that, like I was attempting to say earlier, is because these net put premium decreases, that's because those contracts were higher value premium, lower volume traded. So the result is volume increasing over the day. And so that suggests to me that those puts, profit was being taken on those versus net call position premium going up. Those are probably cheaper contracts, higher volume. And so, let's say, these contracts are, let's say just easy numbers. Let's say they're $1 each. And so you have that increase in a premium that's going to be, 250,000 of those contracts. But then let's say this net put premium here, that's represented by those contracts being $2. But you see a decrease that's double that net call premium, then you would get it balancing out right around the zero line. But we actually see volume going up. And so, like, if this net call premium average was around $1, that net put premium would maybe be around 5 or 6. Fewer contracts being sold, less volume in the puts, more volume in the calls increase. So that looks like, a bottom signal potentially. And over here, looking at the bear bull slider, we do see that it is more in favor of the bulls at 48%, but again, that's right around 50%. And if we do look at the data over the past 14 days, we can see that, we do have this large amount of volume over here. We did see something similar over here on, looks like January 29th. We saw increase in call premium by over $700,000 versus net put premium went up by only $50,000. And we did see an increase in that volume overall. Again, seeing something similar over here, but that net put premium coming down. So on the 30th of January, net put premium came down by $275,000 versus net call premium going up by $663,000. But following these big moves, we saw the stock price in yellow come down. So maybe we see something again. Maybe we just see, like a dead cat bounce. So don't get too ahead of yourselves with this, but maybe there are signs that the bottom is being formed over here. But maybe it's just a dead cat bounce and it does continue lower. So I'm prepared for that, but I'm also hopeful that I might be able to get out of my June call at break even, kind of like what happened with Hycroft, taking some of that money off the table. Anyways, coming back to here, looking at the ChargePoint $2.50 call that expires in May of this year, so getting pretty close to it. And as we can see, we've been trading below $1 the past couple weeks. And last week we, really came down a lot. So I'm not feeling so great about this one. I think that it will be a loser, and that's probably going to be, I'm not sure exactly how many contracts I have, but I'd be losing more than, $100 on this. But, it's okay. It's not that big of a deal, but this is one that I am actually kind of wanting to get out of. Not only my call position at break even, that would be at 5 cents. We actually did see highs close to 5 cents, and I've actually been considering maybe taking a 20% loss on this. Considering that the highs were 4 cents and not that much volume traded over last week as well. So just feeling like this is going to be a loser. And, some of them are going to be losers, and that's fine. And so rather than trying to really aggressively get my average down to get out, I have actually been selling some cash secured puts to get my share average down. And, I might get out of this position overall, because the chart is really just kind of starting to remind me of Fisker, in all honesty. And so I'm don't necessarily want to just be holding this down to zero, but I do think that we might be seeing a little bit of a spike following this kind of massive breakdown to 80 cents was the low. And so part of the reason why I think we might be seeing a bounce with this, it's actually not related, to options data, but actually related to short interest. And so I was just curious about this. I just typed in here short interest for ChargePoint float percentage. And so what we can see is that ChargePoint had a short interest of over 30% of its float on Friday, February 7th. And so with that being said, I believe there's a short interest percentage above 20% is considered to be exceptionally high. So I'm kind of wondering if there might be a short squeeze with ChargePoint. And so that's kind of why I want to get my average down with my shares. So I've been selling some cash secured puts with a strike of $1 that I'm, selling to collect a premium to get my average down. So that premium being 10 to 20 cents, stuff like that. And so not related to this call, just thinking about my shares. But let's look over at the chart of ChargePoint. And so this is kind of why this is reminding me of Fisker, just that there's this downtrending purple line that we have respected. We've broken below it massively, coming down nearly 12% on the day on Friday, closing at 81.41 cents. So just not feeling so great about this. I do think that it will bounce and reclaim this downtrend, but now that's going to be acting as resistance. Maybe it will be squeezing up to around $1. I think my average is around $2.11. I've got over 1,000 shares, so I need to be kind of aggressively be buying the dip here to get my average down, so I could exit, around this level here. It looks like at 108, which was the low from November 21st. Actually, the low was $1.05, and it looks like I've drawn a trend line there. The low over here on November 13th was 108. So I do think that this could be coming up to around 125. It does look like I've got that measurement there. And, that does correspond with this yellow line going back to over here. I think getting up to fill this gap at 169, that's kind of a long shot. I feel like getting up to 250 at this point is an even longer shot. So, I'm just feeling a lot less confident in this. But I do think that we could potentially be seeing a short squeeze maybe over the course of the next month. And so that might be an opportunity to get out. And so in talking about, selling cash secured puts, if I do look at the options data over here, the ones that I sold, if I look over at puts, February 21st expiration, I sold a couple of these puts. It looks like the sell fill would be 19 cents. I believe I sold one at 10 cents. So that would be my average for 100 shares. If we do close next Friday below $1, that would be my average fill would be at 90 cents. I sold another one for 15-cent premium, and that would put my average buy for that one at 85 cents. I could have, done it for 20-cent fill, but I didn't want to be too aggressively buying that, because if we do look at the chart, and actually I want to flip this over to calls because that's what my default is. If we do look at the chart, we can see this big red candle. What do we see in the volume? A spike in that volume. So I think that this could be going lower and maybe hanging out below this downtrend. So I am not trying to be too aggressive in getting my average down, but I would like to be able to exit. In all honesty, my share position around 108 I just don't have as much conviction in it anymore. It's a little too speculative. And, at some point, you gotta call it. And so that's kind of how I'm feeling about ChargePoint. But anyways, let's look over at the options data over here. And so, yeah, just looking at this one, it's just the one contract that I have, $2.50, May 16th, expiration at 97 days before this expires. So the clock is ticking about 3 months from now. But yeah, just scrolling down here to look at the data, volume's pretty light. So I feel like I'm not going to have too much of an opportunity, scrolling down here to see the highs of 5 cents last hit on January 22nd. But if we do get a spike, if we do get a squeeze, it might be hard to get a fill for my exit. But I just don't really want to be risking too much, putting extra on the table. But anyways, let's look over at the data here, expanding this chart. We can see that for Friday, February 7th, this is just the 1 day data. We can see that this is actually looking not so bad. Maybe the dip is being bought. We do see that the stock price definitely came down a lot over the day in yellow there, as you can see, to get a little bit of a bounce towards the end of the day. But over the course of the day, we saw some selling of calls initially, but then net buying over the course of the day versus net put premium going up, but then selling off towards the end of the day. And so what we can see is that the net put premium came down by nearly $22,000 versus the net call premium went up by nearly $22,000. So that is good. We can see that the volume was increasing even with the selling of puts here. And so that's going to be because those puts were higher premium, lower volume versus, the probably cheaper calls being bought up, but in higher volume. So we see that, while the numbers here, the net put premium going down 22,000 kind of balances the net call premium going up 22,000. But we see that the volume is increasing. And so that's because fewer of these puts were being sold, but at a higher premium, taking profits on those puts versus buying the dip here in these calls. More contracts, more volume, lower premium. And so that's why we see that here. And if I scroll up, we can see the bear bull slider here, about 54% going long on the bullish side versus, with a little bit of neutral. But overall, even if that neutral is all bearish or more on the bearish side, the majority clearly is more bullish. So that is potentially looking kind of good. If we flip over to the 14-day data here, we can see that, in yellow, that's just the stock price getting annihilated here last Friday. We did see a lot of calls being sold here. It looks like on Wednesday, the 5th, net call premium came down by 73,000 contracts being sold versus net put premium spiking up by about $53,000. So that was not looking so good, and that was followed by this down move. Hopefully, the bottom is in and or near, and so we might be seeing, the end of that. But anyways, I did want to also look for this one, ChargePoint, look at the Greeks. So wanting to look at the options data here, and so we can see that the expiration for February 7th was $1, not too surprised, and we did close below $1 at, 82 cents in the after hours, but closed right around 81.41, I believe. And so that was out of the money for this contract. And what we see here for Valentine's Day, February 14th, is again, the max pain is $1. So maybe we get a bounce, maybe we get a short squeeze and start to go above $1, close in the money there. And we can see that the following week for February 21st for the monthly expiration, the max pain is $1.50. And if we can get above that, the following week again, we see, or continuing, I should say, we see the max pain is actually 50 cents. So if we can start to close above $1 next Friday on the 14th, and then continue to 150 the following week, that could definitely be triggering a gamma squeeze, because for February 28th, the max pain is only 50 cents. And so if we're closing even above $1 a share that could really spark some moves to the upside. And so, yeah, I think that we could be seeing some dip buying opportunities with the current price right now. And then that would be a great time, maybe a month from now, to get out of the contract that expires in May, as I don't think stock price is going up to 250. But if it's getting up to around 125, 150, that could be triggering a gamma squeeze. So look for that. There is definitely some hope. And, as we have respected this downtrend going back to the close of September 9th of 2024, I do think that we will eventually be reclaiming that. And psychologically, I think that, $1 and also, as far as the listing goes of ChargePoint, that's a very important level. So do keep that in mind. But anyways, coming back to the data over here, looking at the GameStop $80 call that expires in June. This is one that I have wanted to buy the dip on. As you can see, the lows over the past week came below $1 in premium, and that was kind of my level. If it comes down to $1, I get another contract. It looks like I think I have two contracts. Let's see, I had bought two over here, one at $3.50, one at $3, but then I sold one for, let's see, over 20% profit, making $80 over there. But then I got another contract back at $220. My average is now at $273. So I could very aggressively be getting my average down with this, but I just haven't seen enough data from unusual whales that suggests to me that the bottom is in. Also, I'll talk about this looking at the chart, but we're getting very close to Roaring Kitty's average, which I believe was $23.71, or sorry, $23.41. And so I think that could be a very nice level to kind of trigger the bottom, buying the dip, and getting that price to go back up. And so, yeah, I just haven't really seen anything in the data that suggests that the bottom is in. And so I am waiting to more aggressively get my average down before, when I start to see that in the data. But actually, maybe there might have been some data on Friday that suggests puts being sold, suggesting that the bottom could be in. And so, yeah, again, with this one, I do have, it looks like just those two contracts. I have a limit sell placed at a 20% gain, and then here a limit sell at a 30% gain. And the reason why it's greater than 20 and 30% is just because when the premium goes above $3, it then goes in 5-cent increments, at least through my exchange, which is Webull. And so that's why I have it just rounded up to being slightly above those percentages. But yeah, we'll see if that happens. It does look like we have been fading in the stock price, premium coming down. My premium, I've just been kind of holding it strong there, just trying to be patient. It does look like volume has been spiking up, but decreasing over here as the open interest has just kind of flattened out up here. So, yeah, and with that also coming down, we do see the IV, implied volatility, coming down in green there. Looks like maybe it's flattening here. Maybe that's forming a bear flag that it's going to come lower. IV is still above 120%. So maybe like to see that come down below 100. But anyways, let's look over at the chart. And then I'll look over at some of that options data. And so here, looking at ChargePoint, yeah, we can see that red dash line there at 2341. That is Roaring Kitty's average, or at least from his last YOLO update on Reddit, 2341. So maybe we come down to that level. And so that's kind of what I'm patiently waiting for. And I regret, I have to say, not trimming a little bit. Up here, we were seeing this double top formation with lower volume on the second peak. That was clear that we'd be seeing a breakdown. We did see that. Could have trimmed a little bit up here to more aggressively buy back down here, but it is what it is. And so what I see with that $23.41 level, I have a few of these uptrends drawn over here. And so the one that stands out to me is this one right here. We can see that corresponds with the low from September 20th as well as the low from October 23rd. And so that has not been violated, whereas this other uptrend has been violated. You can see that we did get kind of a fake out break below it here, and we're getting a maybe fake out break below it currently, but I think that this is going to go lower. And so with that being said, I am actually just going to delete that uptrend because I don't think that, well, actually, maybe wait, before I remove that, I might want to throw something up here, which is going to be the moving average. And so in blue, we can see there, this was pointed out by Colin Gladman, that blue line right there corresponds with the 200 moving average, simple moving average. And that is right around 24.45, so just below the low from Thursday, which was at 24.53. And so, it's quite possible that that holds as support. 200-day moving average, we do break or hold that and then start to move higher, break above this uptrend. But what I would feel a little bit more, wanting to jump on board with would be if we actually got a fake out break below the 200-day moving average, just like we're seeing a fake out break below this uptrend here. I could see us coming down to this other uptrend. I'm just going to make that a little bit thicker, and that would also potentially correspond with hitting Roaring Kitty's average at 23.41. And so I'm just a little bit more compelled by that than I am by the 200-day moving average. I think we could get a fake out break below it. And actually, if we do look back over here, we have spent a good amount of time below that, but we could also see a fake out break below it to kind of get, any bulls who are like, yeah, 200-day moving average, clear level, I'm going to load the boat on it. And then it goes lower and say, oh, lost conviction, whatever, not feeling so great about it. When really that's the dip buying opportunity at 23.41, potentially even coming down to, let's see, this purple line that is going back to the lows that we saw following the big moves in May. That's going back to the pivot low from May 24th, which was at a price of $17.70, and then connecting that with the low from August 5th when the markets gapped down. So I view that to be a pretty important level. And so, yeah, I am actually going to delete this uptrend here that we're fake out breaking below. And, just keeping an eye at 23.41. Also, we do have, I've talked about this before in videos on GameStop, just looking at this retracement here, that 786, I don't know if you can see it, is at 2169, 786 there. And so that would actually correspond with a retest of that purple uptrend. So for me, I've got the breaks right now. If we do respect 200-day moving average, that's great. If we break below it, I'd get a share or start adding more at 23.41, coming down to around 22, maybe 21.69. See how we respect this level. And then that is when I would think it's a great time to be getting a lot more shares and contracts. And that intersection of the 786 with that purple uptrend would be around February 21st, so that's the monthly options expiration, and that would actually also kind of correspond with the intersection here of 23.41 and that white uptrend right around the monthly OPEX for the month of February. So keep 23.41 and 21.69 in mind. But anyways, let's flip over to the options data to look at GameStop over here. And yeah, you can probably see it why I'm not terribly excited about the dip being in is because just looking at all of that selling volume there. And so let's expand that to look at the data over here. And we can see, okay, lots of selling of contracts, volume being massively down and red. And that also not only being calls in green there coming down, so that's bearish, but also puts coming down, so that's actually bullish that puts are being sold. But let's just look at the numbers in general for the day. So this is just one day looking at February 7th. We can see that the net put premium came down by $213.69 thousand. So that is bullish, that net put premium is coming down. But net call premium came down even more by $228.22 thousand. So that makes me think that, the 200-day moving average is actually not going to be acting as support. I think that it will continue lower to around 2341 or 22 or maybe even 2169. I think that those levels would be the dip buying levels and to really be getting more aggressive with the contracts here. And if I do look at the bearable slider just above my head, we can see that is more on the bearish side, but that's only 42% because of that neutral window there, which is about $1.5 million. And so we can see that, maybe it's about 50-50, and that does kind of match the net put and call premium both being negative by about 213 to 28,000 there. So kind of a little bit of a balance, and we can see that net premium came down though by 14,500. It does look like the net premium traded, total premium over the day was 9.27 million, but so the total premium traded on the day was 9.27 million, but the net premium, so premium right there, 9.265, almost 266 million dollars. Net premium was down, so net selling, and the majority of that selling actually being calls, so that's not looking so good. But if we do look at this over the past 14 days, we can see that as the stock price in yellow has been coming down, we do see that the net call premium has also been coming down, so that doesn't look so good. Selling of calls looking bad there, and net put premium has been flat, or at least flat relative to the net call premium coming down. So I am really just looking for these signals in this data to suggest that a bottom is in with GameStop. And while, it might be intriguing that the premium for this contract is below $1, I think it'll go even lower. And so I am going to be waiting for that, bottom signal before I more aggressively start to get my average down, just pumping the brakes on it. This was kind of a bad buy over here at 220. But, it was the low from the day before, so at least give me that credit. But yeah, I could be getting potentially 3 contracts for the price of 1 just from, a few weeks ago. And so that is what I am going to be waiting for with GameStop. But anyways, let's get on to the next one, which is Hycroft Mining. This is the $3 call expiring May 16th. And so this one, I have to say, I GTFO'd my position. My plan was to sell at 40 cents, and so that's exactly what I did. I had 16 contracts. The total equaled about $640. Effectively, I was risking that amount of money. I did sell, all 16 of them at 40 cents because for Hycroft, one of the reasons why I don't like this contract or Hycroft contracts in general is because they're all, at least the way that I can trade them with Webull, is by 5-cent increments. And so, on that day, I sold at the high of 40 cents. Perfect. I feel so good about that. And, and I made up about, half of the volume for that day. So feeling good about that. Half of, the decrease in those contracts. But, the following day, the high was 41 cents. But I wouldn't have been able to get a fill at 41 cents. Because it's in that 5-cent increments. And, on Friday, the high, low, and average, just, not a lot of volume traded on it, was 35 cents. So I'm so happy that I GTFO'd this position here, and I made $13 on it. But yeah, I just don't think that Hycroft, or maybe, it will be going up to $3 a share, by May 16th, as it is, in the upper half of the $2 range, closing the week at $2.55. It may be getting into some resistance now. And so, yeah, and it's too speculative. If you want to do AMC, that's fine. This is an extension of that. And it's just too freaking speculative in my view, especially with the 5-cent increments on contracts. So I'm happy to not be in this anymore. I'm glad I don't hold any shares. And also the videos that I made, this video that Hycroft mining bullish pattern stacked, I was wrong about that. But in that video, I did suggest that it could be going to $3 a share. October 20th is when that came out. Let's just scroll down to the data here. October 20th. That was actually, it came down up to around 291 was the closing price, a couple days later on the 22nd of October, but then it pulled back from there. And so that was kind of, a topping signal. And that's when I started to establish my position. Unfortunately, I was a little late to it. And, from that, establishing that position, I probably could have made, about 20%. As you see the little blip up there, and then it's just been bleeding. So yeah, I think that this is a bad one to be trading, but that's just my opinion. You do you. If I look over at the data for Hycroft mining, we can see this massive move to the upside, going up over 13% on January 30th, and we are holding above this uptrending level. So looking really good. We reclaimed that. It does look like we closed at 255, which is actually just below the 200-day moving average, which I'm just leaving up there from the GameStop chart. And so, yeah, that it could be holding, it could be reclaiming that, but I just view that there's, going back in time, this light blue uptrend, going back to this low from when we had the reverse split, the 1-for-10 reverse split on November 15th of 2023. That low was 163, and then we got this other pivot low over here from March 1st of 2024. We did kind of retest that level over here almost, but we have, maybe it's not such a significant level, but we're getting close to it. We're also getting close to this, high over here around 274, and then getting back up to the kind of psychological level of $3 a share, following the high hit on October 22nd at 294. So just after I put out that video, that was the top, unfortunately. And, this could definitely be going to 3, maybe 4. But I just don't like the options data. And also, looking at the data down here, we do see a massive spike in volume up here. And that is, looking really good, strong there. But then following that, we've got just kind of a decreasing volume and, kind of starting to show some weakness over here. I think that a top could be in or very near. And so what I think would actually be nice for this one would be for kind of a pullback to retest this line and then maybe a bounce or something like that. But that could also be, a bear flag forming here. So good to be cautious about that. If it does pull back, maybe it would be good to keep an eye on those moving averages. It looks like, the 21-day moving average, that kind of peach line could be coming up to there. So maybe look for that. But yeah, I am not planning on holding any shares or contracts in this one any longer. I actually look forward to kind of ignoring it moving forward. But let's see, more of the data here does look like the histogram for the MACD. Maybe it's kind of topping out there. Maybe we start to see a pullback. Does look like the RSI got rejected from right around 70, hitting a high of 69.46 and 69.46 again on the 5th and the 6th, so Wednesday and Thursday of last week, and then pulling back to 66.29 for Friday. So yeah, I think it's probably getting a little bit of a rejection before maybe a pullback like this, and then in continuation potentially to get above $3. But yeah, I just think it's too speculative. not worth the risk. But anyways, let's look over at the data here. So looking at the Hycroft contract, so that's the $3 and 15. $3 call that expires in May 16th of this year. And let's actually just look at the data here. So on, let's see, on the 5th of February, let's just look real quick, going back 3 days. So on the 5th, we can see that, let's see, there's a spike in volume. Let's see, over here, we can see the bid 16. And so that represents 16 contracts, average fill 40 cents. That was me getting the F out of my position. And yeah, so that one candle right there is all me. I'm feeling really good about that. And, maybe I could have made a little bit more money at 41 cents. Maybe it goes up to 45 cents. I could have made notably more money, but the risk is off the table. I am happy about that. I'm just going to switch this back over to the day and then expand this over here so we can look at the expanded data. We can see the stock price in yellow there. And we can see that the net call premium in green there came down negative. So that is not looking so good. Also, though the net put premium was kind of flat on the day, but then came down a little bit. If we do look at those values, we can see net put premium came down by $101. So that's nothing, but it did come down. Effectively flat here, though, you can see on the day. But then the net call premium came down by $1.4 thousand. Again, that's not a lot of money. So just the data here, it's not really that significant. But overall, we can see that if we consider the net put premium to effectively be flat on the day, all of this volume effectively was from calls being sold. So that is bearish. And if we do look at the bearable slider, majority is very clearly on the bearish side at 69%. Having fun with that number. Also, that clearly being more bearish. I think that the stock price is going to go down, and I think that this is a good time to be offloading shares because I think something like this could be happening. I feel like this is kind of a more, a conservative bearish pattern because it would be suggesting that we would be retracing to this level and finding some support there. But actually, speaking of retracements, let's do a Fibonacci retracement here on the chart, going from this low of $1.99 up to the high that we hit on Thursday, which was $2.61. And so I'm just going to lock that into place, make sure 261. Okay, so that is right. And so let's see. Let's look at the 50% retracement. That's around 230. And so, yeah, I mean, I feel like at this point, maybe we come down to the 382, but I feel like it's going to go lower than that. And so, yeah, I mean, I'm just going to leave these levels up here like that. I just don't think, I think it's going to come lower than the 382, which would be at 237. I think that we will be testing that uptrend. And so, yeah, I don't think it looks so good. And I am going to make this look a little bit thicker. That is locked in place. And I'll make it purple. That is where I think, actually, no. Do I want to make it purple? Got the moving averages down here. Purple is just hard to see, and I think light purple is kind of ugly. Actually, nah. Easter's coming up, so yeah, that's kind of a nice pastel color. I'll leave that there. But anyways, let's go over to the next one on the list, which is going to be Intel. I've got two contracts here that I am personally trading. One is the $30 call expiring in June on the 20th, and the other is the $50 call expiring January 16th of 2026. And so looking at these, I have just been seeing a lot of data from Unusual Whales that is, I believe, net put premium coming down, suggesting that, bottom could be forming, but not necessarily that the bottom is being bought up. And so I have been a little bit more aggressive with my contracts that expire in June over the past week plus. It looks like I have bought 5 contracts on Friday of last week, so January 31st. Looks like I bought 2 contracts at 53 and 36 cents on that day, getting my average down from 66 cents to 59. And then, just over the past week, at the beginning of the week, I got, another few contracts at 32 cents, 2 of them there, one at 31. I do have a buy order placed for this one at 30 cents, just one more contract, and it looks like I've gotten my average down to 50 cents. Feeling good about that, and I plan to take profit at 20%. Math is easy on that at 60 cents there. I do think that this could be going a lot higher though, and I've also been accumulating some shares of Intel, but not super aggressively. I just really like the look of the chart, and I think that it's just kind of like in an accumulation phase. Looking over at this one, it does look like I bought a contract of this one over the past, actually 2 of them over the past week. I did take some profits at 20%. It looks like I sold at 111. I did not make 111, so I should probably change this number to be 20% at 31 cents. 3 contracts. Let's just do, effectively, I'll just do the math of, this times 20%, being approximate, times 3. So I made approximately, let's see, now where is the approximate symbol? Approximately $18 on that. So, nothing too crazy, but something there. And so, I'm just going to make that moved over. So I don't have the exact number there. I'm sorry about that. But I did make some money on that. And I did buy back. So my average was 31 cents. I bought back at 30 cents and then again at 28 cents. So my average is now at 29 cents. So, I just feel good about this overall. And this is for a longer term hold. No limit sell placed for this one because I do have a limit sell placed for this one that expires a little bit sooner. But anyways, let's look at the chart and see what that has to tell us about Intel. And I just feel like this, it really just comes down to this 786 here at 1886, right around $19. If I do go back in time, quite some time, we can see where that originates from. And I might actually, let's see, go over here and I might just switch over to the weekly so we can see where that level originates from. I have gone over this before, but that's the retracement over here, going back to the lows from 2009 to the highs of 2021, 786 there at 1886, and that is currently where we're trading at. And so I think that this is just kind of very nice time to be accumulating following this gap down. Maybe, I'm not able to make profits on the call that expires in June, but I do think that we could potentially be seeing a bottom here. Maybe, as I do have the moving averages up there, that 200-day is right around 24.93, right around $25. So maybe we see some resistance there, but that's why, it's good to not be holding these contracts forever, but we do see higher lows being formed here. And so we do have the low from January 13th of 1873, and then the low from February 3rd of 1878. And so maybe what I want to do with that is, let's see, we have kind of done this full retracement, so I'm not going to worry about that level anymore. But what I can do is maybe just draw a parallel. And so I'm going to do that connecting the low over here 1873 to the low over here, whatever that is. And then actually, yeah, doing this kind of like that. And so we can see that, let's see, yeah, what's the low over here? That's 1873. And then the closing price over here, 1920. So let's just look at this, 19. Oh wait, that was the closing price. I want the open, 1878. And so the open price should be 1892. And the 1892. So yeah, that looks good. So that is, those are a couple of levels that, we want to be paying attention to. And so I might make them a little bit thicker. And we are, as you can see, based on the lows, putting in higher lows, even with the opens or the closes, putting in higher lows. So yeah, but don't need to spend too much time on that. We'll see. I think a dip to 19, even potentially, actually, yeah, I don't know. We'll have to see. We'll have to see where this takes us. But let's look over at the data from Unusual Whales. We can see that, I'm not going to go over the individual contracts over here. Let's just look at the data here. Don't want to spend too much time on these. And so what we can see is, increase in volume. So that's looking good. But for both puts and calls, we see that there was an increase in net premium. Looking over here, we see net put premium increased by $230, almost $8,000, whereas net call premium increased. So that's looking good by over $1 million. So looking very good there. And yeah, if we do scroll down to see the bear bull slider, that is majority on the bullish side, but only 45%. So it's kind of just like a 50-50. If we do look at this over the past 14 days, and I might actually expand this a little more than 14 days in just a second. But what we can see is lots of red lines coming down, being negative. So those are net put premium coming down. And so we can see those coming down by here, over 4 million here. So that was on the 28th, here on the 31st, coming down by, again, over 4 million. We see net call premium going up here by over 5 million, with net put premium coming down on the 30th of over 3 million. So, generally, this is looking more like puts are being sold and calls are being bought. Volume is increasing, and so that's suggesting that fewer number of puts are being sold at higher premium. And so that's suggesting profit being taken at or near the bottom, whereas the call premium going up here, that is suggesting that those are cheaper contracts, more of them being bought. So that's establishing positions when premium is low, setting up for the moves higher. And we can also see that over here, there were more calls being sold. We see less of that more recently, so looking good. But then if I expand this to 30 days, there is one day that I really wanted to point out. I've talked about this before. This is from January 16th. We see the net put premium coming down by 15.98 million. That's a lot of money being taken off the table that was short, that was, puts, taking that premium off the table. And with that day, we see volume increasing. So that suggests to me that that 16 million is contracts that are high premium, lower volume being sold. So that's profit taken off the table, whereas the volume increasing suggests that those are lower premium, lots of volume, lots of contracts being picked up that are calls going along, suggesting that they're buying the dip. So I think that Intel is looking really good, but I don't know exactly where the bottom is going to be, as we have spent a lot of time around this 786 at 1886. But yeah, I am, pretty excited about Intel, I must say. But anyways, coming back to over here, let's look at Luminar. This is a $15 call expiring January 16th. This is boring AF. All I have to say, just like no volume, traded on this one. And so, I was considering establishing a position, if it comes down below $1, and we have definitely seen that with the lows, even the highs being below $1. And the reason why I say, the lows, even the highs, is because this was, on the 30th, 5 contracts traded, and they were all just bought, at 80 cents, $400 there, high, low, and average. Super boring, they're all being bought there. But then if you want to sell, there's just not much volume, people wanting to sell them. And so another contract was bought, I believe, on Thursday at 92 cents. This is just boring. So I think that this is a bad contract or a bad stock to be trading contracts on. But I do think potentially that, the dips should be getting bought up with the stock price trading, around $5 or, below $5.50. And so I think this is a nice time to be getting the average down with shares, but not with contracts. There's just no volume behind it. Looking over at the data over here, maybe this is kind of a breakdown below this uptrend. And so for me personally, what I've been doing with shares is it's super boring, but I just buy like 1 share a day. I was buying, 10 shares at a time over here, but I just don't want to be too aggressive. I do think that it could be retesting the lows here around $4.93. And, coming down to $5. I think I actually have a buy order for 1 share at $5. And, just to take advantage of that. But I think my average is around $15 a share. And, so I just want to be taking advantage of being able to buy the dip when it's down here, but I just don't want to be doing it too aggressively in case we do start to revisit this downtrend, which goes back to the lows of April 11th, 2024, basing that downtrend around there. And so I mean, if we're trading above a downtrend and start to hold that as respect, we could be seeing this go to like 420. You see highlighted, or not highlighted, but just on the y-axis there. 420 is a fun number. Maybe we go down to that. And so I want to be able to, not so aggressively getting my average down now, if in case we do go a lot lower. But let's look over at the options data. Again, like I said, it's going to be super boring. No volume traded for this contract on Friday. So let's just look at the general Luminar options data. And so we can see here, this is the data from Friday. Good amount of selling, buying, selling, buying. And overall, over the course of the day, we can see that the net call premium was, coming down for the majority of the day, but the second half of the day that did increase to being positive. And but we see that the net put premium was overall over the course of the day just took a little dip over here, but generally was increasing over the course of the day, being positive. And so if we look here, we can see that net put premium went up by nearly $32,000, whereas the net call premium came down by only about $4,110. And so overall, went up by a little over $4,000. But generally, a lot more buying of puts, that's bearish, versus the small amount of buying of calls, that's slightly bullish. And so with that being said, this doesn't look so great. The bear bull slider is more in the favor of the bears, being over 50%, so not looking so great there. And if we do look at the data over the past 14 days, we can see that there was a good amount of call selling over here on the 27th. That looks like it was net call premium coming down by 2.35 million versus net put premium going up by 19.37 thousand. And so overall, that was a pretty ugly looking day, the 27th. And we can see that over here, we do see some buying of calls on the 31st, and that was a net call premium increase of $1 million. But that doesn't really even balance out the net call premium coming down by $2.35 million on the 27th. The 31st was looking good, but then, we see drawdown on February 4th, net call premium coming down by over $500,000. So, I just think that this is one to avoid as far as contracts because there's not enough volume behind it. And I think that the share price could be going up, but I think it could be fading. And so with that being said, I think it's a good time to be slowly accumulating, DCA kind of boring shares. Anyways, let's flip over to the next one, which is going to be the Marathon Digital $50 call that expires January 16th of 2026. This is one that I rolled contract into, effectively taking $250 from, I believe, a contract that expires in March, so like a month from now, that is probably getting close to worthless. So I feel glad that I did this. And also, that I have been patient and waiting and buying the dip. I could have bought the dip when it came below my average, when it came down to, around $200 $2 per contract, but I have just been waiting patiently. The low last week was hit on Friday at $1.41. I could have been getting my average down from this one contract from, around $2.50 to around $2, but I didn't do that. I'm waiting. Because I just think that this could be going lower, and I want to be patient in, getting my average down. Because I do want to be able to make about $500 in profit on this one. I have that marked as about break even because I lost about $500 on the other contract. But anyways, I don't feel too bad about that, and I feel pretty confident in Bitcoin and Marathon Digital. But I just want to wait for there to be buy signals in the data. I just don't see it yet. And so anyways, looking over at the chart over here, it does look like we have been respecting and or testing the 786 here, which is at $16.83. We did close the week below it. And also we have been kind of fumbling with, this thin yellow uptrend. I'll make it a little bit thicker so it's easier to see. Maybe we break below that. Maybe we retest this red line here at right around 1467, perhaps coming back to this white uptrend, which would be based on these pivot lows here, going back to the lows from December of 2022, around 311. Would have been great to buy tons of shares back then, but oh well. And so, I could see this coming down to around $15 or $14.50. So I'm going to wait for the signals, not only in the chart here, but also in the options data before really getting that average down aggressively. So let's look over here at the contract. Really, I'm not going to spend too much time on that. Did get some selling, as you can see here, which it was highlighted in my chart as well. That's selling of, let's see, only a total premium of, over $250,000. So that's what that selling was. But then we see total premium here around 78,000. But anyways, let's just look at the general data for Marathon Digital, and we can see that volume was positive on Friday, stock price in yellow coming down, but we do see that the net put premium in red going up here, as well as the net call premium, both of them ending the day positive, but the net put premium being higher than the net call premium. So overall, that looks a little more bearish. We can see that the net put premium increased by about $776,000 versus net call premium increasing by $670,000. So about $100,000 difference there. And because of that, we can see that the bear bull slider is more on the bearish side, but it's kind of about 50-50. So let's take that with a grain of salt. If we look at the past 14 days, we can see that there was some buying of calls over here. But generally, I would say, so here on January 21st, that was a net call premium increase of about 4.5 million. So that's looking pretty good. But then that kind of faded and started to go lower here. Decrease of, 2.3 million over here. Decreased calls by 1.6 million. Over here on February 3rd, 1.7 million decrease. So yeah, millions of dollars decreasing in those calls. So, whatever was looking bullish over here, it's not really looking so bullish anymore. So I want to wait to see this data start to look a little bit more bullish, seeing some put premium going up here. That's bearish. And net call premium down here still, that's still bearish. So just, waiting patiently for that dip to present itself and to look good. But anyways, let's switch over to NEO. I've got 3 contracts on this one. First one is the $10 call expiring May 16th. Planning on getting out of this one at, just selling, one contract at break even, another at 10%, and the rest at 20%. Which would be at 18 cents a contract, which is, more than 2x from where we're currently trading, ranging from about 7 to 9 cents per contract. I have been buying this one more aggressively over the past week or so, really just buying dips ranging from about 10 cents to down to as low as 8 cents. I did have some buy orders placed for 7 cents, but those just haven't gotten filled, so it is what it is. And then also looking at the $8 call, this is the OG contract that I was initially looking at because of this spike here, which only corresponded, that's in volume, which only corresponded to an increase in total premium of around 250,000. But we have seen the open interest going up, so feeling better about that. The May one I will come back to. Open interest is up, but it has been fading, so maybe not looking so good there. Maybe that one is going to be a loser. Over here, I do have, limit sells. This one contract probably at 10%, the rest at 20%. And, I did buy one contract last week for this one at 22 cents. Could have gotten some lower than 20 cents, but just kind of focusing more on GTFOing this May expiration with my average at 15 cents. Then the June one, my average at 44 cents. So that's about 2x from where we're currently at. But, I just need to get out closer to my average. And then I also have this other contract. This is the $15 call expiring in January on the 16th of 2026. I have not been buying this one the past couple weeks. Last time I bought was at 30 cents. My average is around 33. And, the premium is right around a little bit lower than my average. I don't have any limit sell orders placed on this one because I want to, get out of these other contracts first. But anyways, let's look over at the NEO chart. So we can see that one. I do have this light blue uptrend giving me a little bit of hopium maybe, that we are respecting that. Also do have this 786 from this retracement. We did go below it and then go higher, so maybe that is not valid, but just kind of hoping convergence of levels there. Maybe that is going to be acting as some support. Looking more fine-tuned, we are below not only the 100, 50, and 21-day moving average. Actually, 21-day moving average is at $4.23.9. We closed just barely above it, being up almost 1% on the day Friday. But that is relative to the previous day's close. It was a red day, as in it opened higher at 428 and closed lower. But yeah, getting rejected from these moving averages. But as you can see with this yellow downtrend, it does look like we do have this kind of wedge here. Might be breaking out very, very soon. We'll also have, a bigger picture downtrend in orange going back quite far in time. And so I am really just hoping for some Chinese stimulus to kind of launch this above these levels. And so if it would be able to get above these moving averages, I think that would look just great. And actually, we can maybe look back in time when those moving averages were lined up like that with, let's see, so let's see, oops, I don't want to move that. Let's see, the blue to yellow to orange. And so the last time that we saw like that was right here. And so we did see moves to the upside, but that was following, some down moves. So maybe we do see a fake out break down to around 361. So, good to be prepared for that. But I am holding my breath. Can't wait for this to break out. But let's look over at some options data that might shed some light on it. I'm not going to look at all of the contracts individually. I'll just look at all the data from all of the contracts. And so we can see here from Friday, just looking at the 1 day, we can see that volume was increasing for generally over the course of the day, but it did close kind of flat. Looks like volume increased by only 729 contracts, with the net put premium coming down by almost $49,000. As you can see over here, the red line is below the zero line. And the net call premium increased, but only by $4.35 thousand. It was a lot higher up here, being up by net call premium being up by about $269,000. But yeah, does look like that came down. Overall, this does look like, net bullish considering the bear bull slider, but it's only 47%, so it's about 50-50. So take that with a grain of salt. But it is good to see that the net put premium was coming down, whereas the net call premium went up. And if we do look at this over the past 14 days, what we can see here is that we have seen, kind of going back and forth. It's kind of showing some mixed signals. Net put premium being up here, so that's bearish. When net call premium is down, also bearish. But then over here, starting to see net call premium going up with net put premium coming down. That is looking more bullish. But here it's looking kind of quiet. So maybe that's a sign that this is going to break down, or maybe we are going to see some announcement of Chinese stimulus and this is going to skyrocket. So that's what I'm hoping for. But hope is a 4-letter word, so do be careful with that. The next one on the list here is Plug Power, being the $5 call that expires January 16th. Not last week, but over the 2 prior weeks, I did establish a position in this, looking like my average is at about 32 cents. The lows of last week was 25 cents, so notably lower than my average, but not that much. The highs were pretty close to my average. And I do have this limit sell placed at 20%. Don't want to fall in love with it. But I kind of been putting the brakes on buying because I think it looks like it could be putting in a bear flag and going lower. And I was just not seeing much in the options data suggesting a bottom is in. And so just looking at the chart here, we can see that, seeing this down move, consolidation, break lower, and consolidating here. And so I think that this could be going lower. And so I've been very reluctant to even buy shares just because I think that this could be going lower. Maybe, though, we do see it is a higher low relative to the low over here at 160, which was the 52-week low. But it is lower than the lows over here, so maybe that's suggesting some weakness. Maybe this is a bottom, but yeah, I think my average for shares is around like 211 or so. And, it's like, well, I could be getting my average down here, but, maybe we see like if I do a Fibonacci extension, so going from the high here to this low up to the high here, let's see where that 100% move would be. That would be coming down to 79 cents, sub $1. So yeah, I'm just pumping the brakes on this. I'll wait until I see data from unusual whales that suggests the bottom is in before I start to get my average down with the shares here, before I start to get my average down with that contracts more aggressively. Because we got rejected over here above $3. That's kind of the level I was talking about it going to. And with the strike of $5, maybe that could be happening, but maybe this just bleeds more. So good to be cautious with it. But yeah, looking over at the unusual whales data here, plug power, not going to go over the individual data here. Volume, probably not super high on this one just because it's a smaller stock. But yeah, let's look at the data here. Expand this. We can see that volume overall on Friday was negative, selling of contracts, but then it did go up positive towards the end of the day. So that's looking interesting. But looking at this, we can see that net call premium was positive, but then actually was not positive, was negative, and then just going lower, whereas net put premium was kind of flat and then came lower. We can see generally net put premium came down by $44,000 versus net call premium came down by $110,000. So that's more on the bearish side, more calls being sold than puts. And if we do look at the bear bull slider, that is 52% on the bearish side, so definitely more bearish there. Looking at this over the past 14 days, we can see that, call premiums going up, put premiums going up notably, especially on the 31st. The net call put premium went up by more than $500,000. And on that day, the net call premium came down by $384,000. And so, generally puts stand out as being positive. Calls stand out as being negative and or not really that positive. So I think that plug is probably going lower. So, whatever I'm holding, I'm just kind of holding, not necessarily buying the dips just yet, waiting for this data to suggest that the bottom is in. And then coming back to the charts here, let's look over at QuantumScape. So QS, this is the $10 call expiring January 16th of 2026. And so I don't have any contracts here. I do have some shares. I have been putting the brakes on buying shares, don't have a big position. But just the data does not necessarily suggest to me at the bottom is in. And I think also, this is kind of an example of I don't really need to look at the data that I compile to get, the idea of whether the bottom is in, because I can just look at the chart and or look at, the Unusual Whales website. And so that is, what I'll do in just a second with you guys. But here, QuantumScape closed on Friday below $5 a share. I did have this Fibonacci retracement here, the 786 at 514. We have been trading below it. We are still putting in higher lows, but we did break below this trend line that I had drawn there. And so what I might want to do is unlock that so I can redraw it, go into the lows 465 from November 18th, and then kind of connect that with the lows over from here, the close on December 19th being approximate right around there. And so, maybe we're going to find that as support. But with that being said, maybe we are going to put in a head and shoulders pattern. So maybe that doesn't look so good there, but that could also be a fake out head and shoulders pattern because it's super ugly, because generally overall we have kind of breaking out from this downtrend. And if we're testing this and holding that, that could be a nice dip buying opportunity. Maybe we see a bounce. It looks like earnings are coming up on the 12th. So that's, I believe, Wednesday. Not sure if it's pre-market or after hours. But maybe we see this really take off following those earnings. And we'll have to see. And maybe the Unusual Whales data will shed some light on whether that's going up or down. So let's look over here at the QuantumScape contract. But I'm just going to look at all of the data. And we can see here very clearly lots of selling of contracts, all of that volume being red. And we can see that as the stock price was going lower with a little bit of a bounce at the end of the day, that the net call premium was negative quite substantially versus the net put premium was a little bit positive. That's bearish. But then it did go negative, so that's a little bit bullish. But looking at the data here, we see that the net put premium came down by only about $85,000. whereas the net call premium came down by over $291,000. So that being more bearish than a little bit bullish on the put side, but just looking at that bear bull slider, 48% on the bearish side, maybe it's about 50-50, but just looking at the numbers here, calls are down a lot more than puts. So I'd say that doesn't look like a good time to buy just yet. Looking over the past 14 days, we can see that generally, just taking a step back, generally we can see that more call puts in the red are positive here, with net put premium being highest of about $340,000 on the 6th, so on Thursday, and on that same day, net call premium came down by $777.52 thousand. And generally, we can see call premium being kind of more negative here versus the net put premium being more positive. So I don't think the bottom is in just yet for QuantumScape, so good to still be pumping those brakes. Coming back to over here, let's look at Rivian. This is the $25 call expiring January 16th. This is one that I am also not in, have not traded. But I do think that maybe, bottom could be in coming up soon. We'll have to see. We have seen some spikes in volume, open interest going up. But yeah, stock price and premium price coming down. So yeah, let's look over at the chart and then over at the unusual whales data. And so here, looking at the Rivian chart, and so this to me, I've got lots of stuff, lots of crap drawn up here. Maybe actually, though, it is finding support. The 200-day moving average is at 12.48. That's what we closed at. So maybe there is some support being found there. But generally, we did see this big move up, and it's just putting in lower highs and kind of lower lows. Maybe this is a bull flag consolidation and it's going to break out, especially with earnings coming up on the 20th. So that's probably a couple Thursdays from now, given that Friday is the 21st. Not sure if this is before or after the market closes, but since it has progressively been moving down, this Fibonacci retracement, and so I can just adjust that, we see the 50% retracement at 1307 now trading below it, so I can remove that. And we did come down to the 618 and the 65% retracement at 12 to 1223. That's the golden pocket there. Did test that. Maybe that holds. Benefit of the doubt. Let's leave it up there. But if that doesn't hold, coming down to 1103, that's where I got my alert set. I think that could be possible, and that could be corresponding with earnings. So I think it's good to not fall in love with a stock. And so I am not falling in love with this one, and I'm actually going to make the line a little bit thicker on those retracements. I know it's a little bit cluttered here, but I'm going to kind of delete some of those levels. And yeah, I could remove those moving averages, but perhaps it's good for me to get used to looking at them. Maybe there's some hopium support there. I think it's probably going lower. And to kind of validate whether or not that claim could be true, let's look over at the data here. Not going to look specifically at this individual contract, just looking over at all of them over here. We can see that volume was positive, increasing in a number of contracts held on Friday, February 7th. But then over the course of the last part of the day, last couple hours, we do see, or hour and a half, we do see that volume did drop. And with that, we can see that the net call premium was negative, so that's bearish. Net put premium was positive, but then did get a bit of a sell-off, so maybe that's a little bit of a good sign towards the end of the day. But overall, we can see that net put premium increased by almost $61,000 versus net call premium came down by nearly $280,000. So both of those are bearish. And if we do look at the bear bull slider just above my head there, it is more on the bearish side, but only 46%, but about 50, so about 50-50. But generally the data does suggest bearish. But let's look at over the past 14 days. Maybe that's going to shed some light on what's going on here. We do see this big increase in call premium on January 24th. That was an increase of call premium by 1.4 million, whereas on that day net put premium came down by about $146,000. And so that was net bullish on that day. But following that, we've really just seen calls, the green here being, on the negative side of this zero line that you see where the cursor is. And so, yeah, I mean, I still feel like this is probably going lower. We don't see, but we do see, we don't see puts increasing. We do see them decreasing, and so maybe that does suggest that a bottom is near, but not just yet. And what would suggest the bottom being in would be, net put premium being negative, selling of puts, taking profits, and the net call premium being positive consistently. And we're just not seeing that yet, so I don't think a bottom is in just yet on Rivian. And so let's come back here. Just got a couple more tickers left. And so here, just looking at the Unity software, this is the ticker symbol U, $42 call expiring June 20th, and also going to be looking at the $65 call that expires January 16th. I do have one contract in this at $1. Could have made 10%, 20% profit on this, but I just held it, and now we are currently lower than my average, more than 50% down, so not looking so great there. But I've got until January 16th, so I'm not in a rush with this one. The other contract, I did buy a couple last week at 50 cents, which I was the high on that day, got filled right at open. That was a bad move, but then I did get the low for those 2 days at 36 cents, got my average down here from 107 down to 86 cents, and I do have a limit sell placed for this one at 103. We will have to wait and see if the data is suggesting that the bottom could be near. And so let's just first look over at the chart. And I have this, channel that goes back in time that we've really been accumulating in. I think it just looks really, really nice. But I do think that we could be coming down to, I've got an alert at $20 right there. We closed at on Friday on the 7th at $21.04 after hours being at 21. And part of the reason why I think that we could be coming down to around $20 is if we do look at this Fibonacci retracement. I do have the 618 at 21.64. We are trading below that, and so maybe what I want to do is remove that level. So we just have the 786 up there, and that 786 is at 1973. That is also pretty close to the 200-day moving average, which, let's see, the 200-day moving average is at $20.17. Can't see it over here on the side because I got my alert covering it, but you can see it up there at 2017. Also, we do have this gap that has yet to be filled. Maybe that's kind of aligned with my AMC thesis that we leave the gap behind, leave people wanting that gap to be filled to load the boat at that level, leave them behind, take off, and then they load the boat up here after they've recognized they have been left behind. And so that gap is at a price of $19.80. And also corresponding with that 786 at 1973. So we just have a lot of levels here, right around $20 a share. One being the 200-day moving average, another being the gap, another being the 786, and another being the psychological level of $20 a share. And we also have this uptrend here, going back to the lows, going back to August 7th, of 2024, that was a low of $13.90. Also the lows over here when there was again a confluence of levels here. And so I see again, we could be seeing that confluence of levels right around $20 a share. So I don't have a buy order for shares, but I'm going to write it down here just to, get one share, nothing too crazy at $20. And then to see how this takes off. And we do have earnings coming up on the 20th for Unity. Maybe that's a catalyst for this to start to take off if it's around these levels. And so I think, if this comes down to $20, and we start to see some unusual whales data suggesting that the bottom is in, I think then it's the time to load the boat and to see this really take off again, like we saw over here. And just let's get a measurement on that move from the confluence of those levels. It went up by 65%. And so maybe we see that again over here. So yeah, I think it's good to just be patient at this point with this one before the buy signals really start to come in. But let's look over at the unusual whales data here, not for the individual contracts, for all of the contracts, looking at the volume and the net premium. And so here, this is just one day looking at Friday, the 7th. We do have volume increasing a little bit, but then over the course of the end of the day, some selling and it being kind of flat. We do see net call premium in green being negative over the course of the day and ending the day notably more negative. Whereas put premium was kind of flat, but then some selling there, which is a little bit bullish. But given that the net put premium came down a lot less than the net call premium, that suggests to me that this is more net bearish. So if we look at the data over here, we can see net put premium came down by nearly $34,000 versus the net call premium came down by more than $320,000. A lot more bearish there. And if we do look at the bearable slider, we do see it at 53%. So that is a majority. Very clearly, even considering this neutral, maybe it's at 54%. Maybe it's no matter what going to be at least 53%. So yeah, that doesn't look so good. I don't think the bottom is in just yet with Unity. So I am looking for a dip to around 20 bucks. Like I said, I think it's going to be the time to load the boat. I'm excited for it. But looking at the data here for the past 14 days, what can we see? What stands out? We do see some calls being positive here, but that's only up by 124,000. And on that day, that was the 6th, we see net put premium coming down by more than $300,000. So overall, that's net bearish on that day. And yeah, big call premium coming down here. So on the 5th, net call premium came down by over $580,000. But, on that same day, net put premium also came down, but only by $127,000. So that's still, net bearish. And generally, we do see some calls being bought up here. Also, some puts being bought up. So that kind of balances that. And so, yeah, I don't think that just yet we are at the bottom yet, but I do think it is good that we're not seeing calls going up so much here, and this day did end up pulling back some. This was the 24th net call premium increased by $581, almost $82,000, but then sold off some, ending the day around net put premium being up about $118,000. But yeah, there's just not clear signals in this just yet. And looking back at this chart, because I think it looks just beautiful, 20 bucks, that is going to be the dip for Unity. And at that time, I think we'll start to see a lot more bullish data. And that's going to be supported, I think maybe by a catalyst around earnings, maybe by Roaring Kitty tweeting something cryptic, whether it's Unity, whether it's GameStop, who knows. But I am feeling pretty good about this. But anyways, let's come back to the chart here. You can't see it from the tab, but we're going to be looking at Wolf. This is the Wolfspeed $20 call expiring January 16th of 2026. So this is one that I did swing it a couple weeks ago. I bought a contract at 90 cents. And then I sold it for 20%, making about 18 bucks. And then I bought back lower than the average I had before. I had my limit sell buy actually at 80%. Got filled at 79, so happy about that. Could have gotten my average down because the low on Friday was 70 cents, but I'm just chilling. I'm going to wait for, some catalyst or something to suggest that the bottom is in. No limit sells on this one because I have until January. And yeah, I think that this could be going a lot higher. But one thing that I have talked about is this coming lower to around 521. We're nearly there. And so I'll just go over the chart in a second why I think that could be a bottom. But I did just want to point out the increase in these volume here corresponds with increases in the open interest. But those spikes in volume don't really correspond with a lot of money, surprisingly, not a lot of premium. So that's actually pretty surprising. But yeah, there has been an increase in open interest. But yeah, let's look over at the chart here, Wolfspeed. And yeah, the reason why I think this could be coming down to 521 is because this Fibonacci retracement. We were holding 564, which was the 618, but on Friday we got this big rejection from the 21-day moving average, which is currently at 593, as you can see right there, that little peach-colored line. Got a big red candle on the day, so came down nearly 10% on Friday, closing the week at 533, being up a little bit in the after hours, about 4 cents. But we do see that massive rejection candle there, closing below the 618. So I might actually remove that from the retracement there just to clean up the chart a little bit. And yeah, so the 786 is around 521. I do have this kind of arbitrary line here, purple line. Maybe that's based on after hours pricing. Maybe there's a pivot point. No, I think that's really just kind of arbitrary, but we are trading below that level. And so yeah, take that purple line with a grain of salt. We do have a gap down here at 482, which was the closing price on January 14th. So we might want to wait for that gap to be filled, but that might also be kind of a tease for bulls or those wanting to go long, to waiting for that gap to be filled and, them getting left behind. So maybe we just find a bottom around 521 or $5 psychological level, whole dollar number, So I think that over the course of the next week, if we do see a dip to 521 or $5, dip buying opportunity, 482. If we do get that fill, I just like to see it holding higher than this previous low of 466, which does look like it is the 52-week low, so an important one to consider there. But if we're, holding above this gap, it's putting in higher lows, and things would then start to look quite bullish in my view, because we do have this massive or, really long-term downtrend going back to the highs of December of 2023. And so that has been notable resistance. This could be breaking out. And I do have this Fibonacci extension that could be suggesting, 14, 15, 20, maybe $30. Who knows? So yeah, I think there's a lot of upside potential for Wolfspeed, but let's see what the options data has to say about it. And so not going to look at the data for the individual contract, going to look at all of them over here. And so on Friday, we can see that there was an increase in volume, increase in contracts being bought up first part of the day, but then big selling at the end of the day. And we can see that the zero line is right around here. And with that, we see net call premium in green increasing. That's going to be reflected in here. Volume going up also with the net put premium increasing as well. And then we see increasing. So I'll just talk about the net call premium first. Increasing, but then it fades towards the end of the day. And then we see the net, the net put premium increasing, some selling here, and then this massive jump up. So I find that to be pretty interesting that we see this massive volume dump corresponding with it. So it might just be that, there were some, let's see, maybe it was, I'm not sure. This is actually kind of confusing because you do see call and put premium both being positive, but the volume going negative. And so that would suggest that a high number of high number of cheaper puts maybe being sold here with the calls fading down. And so what it might be is that maybe there was a swap between, having, let's think about this, having a large number of cheaper puts being sold versus a small number of more expensive puts being bought. And so that would send the premium going up because a small number of expensive contracts are bought versus a large number of cheaper premium puts being sold. And so that's how you get something like this. And if we do look at the net put premium over the course of the day, went up by about $156,000 versus net call premium went up by only about $115,000. Overall, more puts being bought or more put premium going into it, I should say. And so that is going to be more negative or more bearish. If we do look at the bearable slider, that is 44% being on the bearish side. So that is the majority considering the neutral. But if we do factor in the neutral, maybe it's about 50-50. So take it with a grain of salt. But overall here, this does look more bearish to me. If we look over the past 14 days, what we can see is some spikes in put premium. This over here on the 29th, ending the day by an increase of about $538,000 put premium, but calls also being positive, but only being up by about $300,000. But less than those puts, so that is going to be more bearish. We do see some puts being sold over here, but contrary to that, see some being bought here and here. So it's kind of, in this like 50-50 zone, but we do see more recently a big spike in calls right here. So on the 5th, call premium, net call premium increased by $467,000 on the 5th versus net put premium only went up by about $53,000. So this is looking a little bit more bullish. But stock price is still coming down. And so I don't think that we are there just yet. I think in the next week or so that we will be seeing maybe some dip buys, some pullbacks when it does come down to around 521 or maybe 520. Hopefully this gap doesn't get filled and we do put in higher lows. But if it does get filled, keep an eye out for 466. We want that to remain the 52-week low. But anyways, if we do come back to the data here, that is all of my theses here. And so, I hope that you guys did find this limited series to be helpful. This is the final week. And I have to say thank you all for the views. I will try to cut this down to clips before market starts on Monday, so you can get an overview of all of these tickers. But as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot. Take care. Have a great weekend. See you later, guys. Bye.